What up, guys? Mr. TFX speaking. That's the market breakdown for USDJPY. What is today's date? 22 and the second. It's the 22nd of February 2022. USDJPY. Okay, obviously, you can clearly see that the market gave us impulse and then correction, and then we're hoping for another impulse in there. So every time the market gives you a correction after an impulse, you should expect another impulsive wave. By Elliot's wave theory, you can clearly tell that you can clearly see that the market is ready to give us another impulse to the upside. Okay, but now we are on a monthly time frame. That's where we should start always when analyzing the pairs, because we want to see the full movement of the market. In here I can see that the market has touched for the second time. It's touched for the first time and then the second time. Every time when it reaches this area, it's falling. Unfortunately, I don't know what's happening here, but we can see that the market was falling from the upside, gave us this bottom and then top, this bottom, top, another bottom. But this sure looks like a head and shoulder pattern for those who trade patterns. But what I see on my side is that the market should go to this area again before its fall, or it should break this area, perhaps maybe come back for a retest and then rise. So we've got like two scenarios when it reaches this area. It's either it's fall from this, or it's break it, come back for a retest, and then it rises. But for now, we can't make decisions because we're on monthly time frame. What we know for sure is that the market should come to this. So this in here is a lot of pips or points we can take. So let's move down to, okay, once again we have another thing that we see in here. The sensitive zone in here is touched in this area, this one, and then even here it's touched. So now let's move to weekly time frame just to see how the market is behaving. On our weekly time frame, we can clearly see that the market structure is bullish. You can place a trend line like this, or you can just see that this is our low, the lowest point, and then this is the higher low, higher high, higher low, higher high, higher low, and then higher high, and then we're expecting another higher low somewhere here before the market rises. This is what we have in here. So the structure of the market is bullish. That's what we see. The structure of the market is bullish. Now, every time we see a buying opportunity, we take it because the structure is bullish. We're on a bullish trend or whatever. So another thing I see here, because I'm that one person who trade zones. This is zone to zone trading is the way to go. You can clearly see that this was our sensitive zone. It's touched multiple times, 1 2 3 4, and then it's touched here and then went above, finally came back for a retest. So now it should do what? It should rise. I don't like this color, so I'll change it to yellow. So we're expecting it to rise from this area, but then again we can't take entries on a bigger time frame like this one. It's not possible. Moving down to daily time frame, we still have the very same thing. The structure is still bullish, guys. Or we can check it like this one. The structure is still bullish. The structure is still bullish. You can clearly see that it is still bullish. So every time we touches this trend line, we are ready to buy. But then we don't take entries based on a trend line. No, we take them based on a zone. So currently the markets can push a bit down, a little bit down, and then push to the upside. It's very possible we will have taken this position not based on a trend line, but based on this zone in there. So a trend line is only for us to see the direction of the structure. So that's it. Okay, moving down to 4 hours, we now want to have what we call the entry points. Yeah, we're now looking for entry points. The entry I can see, okay, here I can clearly see that we have a zone in there. We have another one in here because it's touching multiple times. We have another one in there, that area, touching multiple times. So what we can see that is that the market pushed from this zone, gave us, and this is a sensitivity, there's a high liquidity in here. You can clearly see these shadows or wicks. So it's pushed to the upside. The possibility is that it's gonna fall back to this area before it rises. So possibly this one, let's highlight it. Okay, or it will just push from here to this, come back to test it, and before it rises to this. So we have two possibilities in here, but all in all, we know that the market is buying. And once again, in here we have impulsive wave. This is an impulsive, and then it started to give us a correction, so we should get another impulse. That's what we have again on our 4-hour time frame. Let's move to daily, I mean to 1 hour. So from 1 hour time frame, we should already have entries. First entry would have been this one. I'm sorry about that. Just need to delete this and then change colors. Nice. So the first entry would have been here. There's something called, call them boxes or whatever the name may be. In here the market was giving us some sort of I don't know if I should call it a correction, or, but you can see that the market failed to break below here with a strong bearish momentum. So instead it gave us a bullish momentum after this box. Okay, so our first entry would have been here, but now the market has moved. The market has moved. We should look for another opportunity because we missed this one. Another opportunity is here. You can clearly see if we adjust this or just place a rectangle, because a rectangle will show us a nice structure or a clean structure. We can clearly see that in here the markets did break above this zone. So when we take an entry, we should take it above here, because if we are above a zone, we are on a buying, we have strong buying opportunity or more buying opportunities here. That's it. But if it's below a zone, then that we have more selling opportunities than on a buy. So even this one, I can highlight it just like this. leave it like this. So we have this possible move. So it's either you take your buy here, but now if you take your buy here, remember we're going for that point right over there. If you take your buy in there, you should at least expect your stop loss to be at negative 0.100. That's like 100 points, 1000 pips, 100 points. Yes, that's just 100 points. Always when you're trading USDJPY, your stop loss should be at negative 100 points. If it falls below that, then it's a loss. And then if you take an entry there, then your stop loss should be at least there. You see that you can't afford this trade. You really can't afford it. That's why we don't trade breakouts. We wait for them to come back and test before we buy it. So our next possible entry will be here, keep taking our stop loss at negative 100, as you can see in there, and then a take profit would be determined by the ratio. Always you should do a ratio of 3.8 to 4. That's a reasonable ratio. So this should be our take profits, and our stop loss is like this. So we are now waiting for the market to touch there and fall, even if it doesn't reach this area. But if it fall back to this one, then it is our buy entry. You can take it here, or you can take it when it's right inside the zone, and then yeah, it rises. So the term zone to zone trading, we take an entry from one zone to another. So at this point we would have taken this to this next zone, but now this is a zone where it gave us a pullback for a retest, so we can't just limit ourselves to that one. So we can just push it up. That's a ratio of 4. 4 is still reasonable, but then it requires a lot of patience. So this is it about USDJPY. I'm gonna analyze another pair again and share it to our Telegram channel. Thank you.